Ethiopia just unlocked a $1.7 billion mining secret the world isn't talking about yet. In this video, we are going to look at Ethiopia's bold mining reforms and what they mean for global investors. The government has simplified licenses, offered tax breaks, and opened doors for international firms. With over 30 minerals waiting to be explored, from iron and potash to gold and rare gemstones, this could be Africa's next economic powerhouse. We'll reveal the exact deals that are already transforming the sector and why global powers are watching closely. Stick around to discover the untold story of Ethiopia's emerging mining boom. For decades, Ethiopia was primarily associated with coffee plantations, agriculture, and development struggles rather than large-scale mining. Its vast mineral reserves remained largely untapped, trapped behind outdated laws, bureaucratic bottlenecks, and infrastructure gaps. Investors knew the potential existed, but the barriers made the country a challenging frontier. Now, however, everything is changing. The Ethiopian government has launched an ambitious reform agenda designed to open its mining sector to global players. With streamlined licensing, transparent regulations, and enticing fiscal incentives, the message is clear. Ethiopia is ready for serious investment. But what does this shift truly mean for Ethiopia, Africa, and the global commodity markets? Let's dive into the story of a nation on the verge of a mining renaissance. Ethiopia is sitting on what many experts now call one of Africa's most underexplored mining frontiers. According to the Ethiopian Investment Commission, the country is home to more than 30 different mineral types, ranging from precious metals like gold to industrial minerals like potash and phosphates, as well as construction materials and rare gemstones. This diversity alone makes Ethiopia a rare and highly strategic resource hotspot. Let's break down a few of the key figures. Iron ore deposits are estimated to exceed 1.1 billion tons. Potash, vital for fertilizers and agriculture, sits at approximately 350 billion metric tons, while phosphate reserves reach nearly 1.85 billion tons. These staggering numbers aren't just statistics. They represent enormous potential for both domestic growth and global supply chains. It's no wonder mining companies from around the world are now turning their eyes toward Addis Ababa. Investors see the combination of massive reserves and a government actively opening doors as a rare convergence of opportunity. And yet, mineral potential is only part of the story. The rules governing how these resources can be accessed are just as critical. Potential alone does not generate wealth. For Ethiopia to transition from a resource-rich country to a mining powerhouse, regulations must make sense to investors. Recognizing this, the government has enacted a series of reforms aimed at transforming Ethiopia into a more attractive destination for mining and exploration. The Ministry of Mines emphasizes that these reforms are designed to simplify processes, encourage exploration, and maximize Ethiopia's mining potential. Licensing procedures have been streamlined, geoscientific data has been made more accessible, and transparency measures are being enforced to give investors confidence. Financial incentives are also being offered: reduced corporate tax rates, duty-free import of essential capital goods, accelerated depreciation schedules, and royalty structures designed to balance profit and sustainability. These steps send a clear message. Ethiopia wants serious global players and is willing to make it worth their while. The results are already visible. In May 2025, at a major investment forum in Addis Ababa, Ethiopia signed over $1.6 billion in mining and energy deals. This isn't small talk. It's a clear demonstration that reform plus opportunity equals action. And yet, despite the impressive figures, there are underlying complexities that investors and observers must navigate. Concrete investments tell a story that numbers alone cannot. Take May 2025, for instance, when Ethiopia unveiled over $1.7 billion in new mineral and energy deals, with a significant portion going to Chinese companies. This includes a $500 million commitment from Hua-Yi Mining Processing Company for mineral exploration and processing, signaling confidence in Ethiopia's resource landscape. Meanwhile, Sequoia Mining and Processing Plc, a major player in coal, committed $600 million to expanding operations. And in Ethiopia's Gambela region, Akobo Minerals AB, a Scandinavian gold producer, converted debt into equity and secured backing from Ethiopia's sovereign wealth fund, solidifying its commitment to long-term operations in the country. These deals are more than transactions, they represent momentum. They show that global investors are not just observing from afar, they are actively engaging, signing contracts, and putting real capital on the table. For Ethiopia, this marks a dramatic shift from decades of dormant potential to active participation in the global mining economy. The narrative here is transformative. Historically, mining accounted for roughly 1% of Ethiopia's GDP, despite significant resource reserves. The sector was fragmented, inefficient, and largely overlooked. But with sweeping reforms and a growing influx of global capital, the landscape is changing. Government projections suggest that if current trends continue, mining could contribute up to 14% of GDP by 2030. That is not just growth, it is a potential economic revolution. Ethiopia is moving from the periphery to the center stage of African mining, challenging the dominance of traditional players like South Africa, the Democratic Republic of Congo, and Zambia. This shift also carries broader implications. China, Europe, and other Western nations are now watching Ethiopia as a strategic frontier. If Ethiopia can scale its mining sector successfully, it may reshape not only regional economies, but also global mineral supply chains. The stakes are high. Whoever controls Ethiopia's minerals may influence critical resources for the next generation of technology, energy production, and manufacturing. Of course, no story of economic opportunity is without its challenges. Ethiopia's new mining law centralizes control at the federal level, which has drawn criticism from regional governments asserting their rights over land and mineral resources. This tension has the potential to create political friction, slowing progress if not managed carefully. Contract transparency also remains a concern. While reforms are underway, state-owned enterprises often receive preferential licensing without full competitive processes. Infrastructure gaps, limited human capital, and logistical challenges in remote mining regions present further obstacles. Yet here's the paradox. Despite these structural challenges, Ethiopia is already capturing global attention. Visible reforms, major deals, and a willingness to collaborate with international investors signal a shift in the balance of power. The country is no longer a passive resource holder, it is an active contender shaping Africa's mining frontier. Now comes the part that changes everything. Ethiopia's mining reforms aren't just about minerals, they're quietly redrawing the map of global supply chains and geopolitical influence. Think about it. A country long regarded as a minor player in mining suddenly opens its doors, offers licenses, and invites billions of dollars of foreign capital. That alone makes Ethiopia strategically significant. Why does this matter? Global demand for critical minerals, gold, iron, rare earth elements, and the emerging race for lithium is surging. These minerals are the backbone of energy transitions, high-tech manufacturing, and emerging industries worldwide. By unlocking its mineral wealth now, Ethiopia positions itself as a potential key supplier for industries that are shaping the 21st century. And the world is watching. China, already heavily invested, isn't waiting for Ethiopia to prove itself. European and American investors are evaluating every move, aware that early access to Ethiopia's resources could provide a significant advantage in the years to come. Let's take a closer look at what this means geopolitically. Historically, African mining has been dominated by a few key countries. South Africa, the Democratic Republic of Congo, Zambia, and Botswana controlled major shares of global supply chains. But Ethiopia's emergence threatens to disrupt that long-standing order. The country sits at a crossroads geographically, bridging the Horn of Africa and the Red Sea corridor. Its position offers logistical advantages for exports, regional trade, and global access. Moreover, Ethiopia's mineral profile is diversified, meaning it can supply multiple high-demand resources simultaneously. Consider the perspective of a global investor. Getting in early on Ethiopia isn't just a financial opportunity, it's a strategic positioning. China's investments, for instance, signal more than commercial interest. They reflect a calculated move to secure long-term access to minerals critical for technology, infrastructure, and energy production. Europe and the West are also paying attention, though more cautiously. Licensing reforms, incentives, and clear investment frameworks make Ethiopia increasingly attractive, but navigating political, regional, and infrastructural challenges requires patience and local insight. The twist? Ethiopia is now at the center of a subtle power contest over who controls the next wave of mineral resources. It's not all smooth sailing. Despite reforms, Ethiopia faces structural hurdles that could slow growth. Federal versus regional disputes over mining rights could escalate, creating uncertainty for investors. In some cases, state-owned enterprises are granted licenses with little competition, raising questions about fairness and efficiency. Infrastructure gaps remain significant. Mining zones are often remote, with limited roads, rail connections, and electricity access. Human capital is another challenge. Skilled engineers, geologists, and miners are in short supply, making knowledge transfer and training critical for scaling operations. Yet these challenges present opportunities too. Forward-thinking investors and mining companies that engage early, invest in local capacity, and partner with government agencies can gain first-mover advantages. The very obstacles that slow competitors can be leveraged to create strategic, long-term positions in Ethiopia's mining ecosystem. And here's the key point. Even with these risks, the sheer scale of investment and reform underway signals that Ethiopia's mining sector is not a speculative venture. It's a real, tangible frontier. Companies and governments that recognize this early could reap significant rewards as the country transitions from dormancy to resource powerhouse. Let's bring this to life with examples. In the Gambela region, Akobo Minerals AB's gold operations are setting the stage for sustainable extraction practices. By converting debt to equity and securing sovereign fund backing, the company demonstrates a new model, one where foreign investors, government agencies, and local communities can align interests to drive both profit and development. In other regions, Huayi Mining Processing Company is not just exploring minerals, it's investing in processing facilities that add value domestically rather than exporting raw ores. This approach represents a shift from traditional extractive models in Africa, where raw minerals are often shipped overseas with minimal local processing. Sequoia Mining and Processing Plus Coal Investment reflects another important dimension: energy security. By developing coal mining operations responsibly, Ethiopia is exploring ways to support domestic energy needs while contributing to export capacity. Across the country, these projects collectively indicate that Ethiopia is moving toward a vertically integrated mining sector, capable of shaping local economies and contributing meaningfully to global supply chains. Now let's step back and consider the wider implications. The global mining landscape is entering a period of unprecedented demand, especially for minerals critical to technology, green energy, and industrial growth. Countries that can deliver secure, reliable sources of these materials gain strategic leverage. Ethiopia, once an overlooked backwater in global mining, is becoming a contender. By offering transparent reforms, attractive incentives, and a clear path to extraction, it's signaling to the world: we are open for business and we are serious. This is significant because mineral supply is no longer just a commercial issue, it's a strategic one. Nations, corporations, and investors are watching closely, not merely to profit, but to ensure access to resources that will define future technological and industrial power. Ethiopia's rise in this space could influence global negotiations, trade agreements, and the regional balance of power. Looking forward, Ethiopia is not simply content with selling raw materials. The government envisions a comprehensive mining ecosystem. Exploration, extraction, processing, and value addition, all within its borders. By fostering partnerships with international firms, investing in human capital, and improving infrastructure, Ethiopia aims to ensure that the benefits of mineral wealth extend beyond investors to the national economy. Projections suggest that by 2030, mining could contribute up to 14% of GDP. This would be transformative for a nation historically reliant on agriculture and limited industrial output. For Ethiopian citizens, it means potential job creation, improved infrastructure, and opportunities for regional development. For global markets, it signals a new reliable source of critical minerals at a time when supply chain resilience is paramount. To summarize, Ethiopia's mining reforms are more than policy tweaks. They represent a strategic awakening. From Addis Ababa to remote mining regions, the country is quietly becoming a hub of investment, innovation, and global interest. The promise is enormous. Billions in investment, vast untapped mineral resources, and a shift in the balance of global supply and influence. Watching Ethiopia now is not just about observing economic growth. It's about witnessing a nation position itself as a key player in the future of strategic minerals. If this story gave you insight into Africa's evolving role in global mining and strategy, take a moment to hit like and share it with someone interested in markets, geopolitics, or Africa's rise. Subscribe to the channel for more deep dives into the stories shaping the continent and the world. And in the comments, I want to hear from you. Which mineral do you think Ethiopia will dominate in the next 5 to 10 years? And how might that reshape global supply chains? Let's start the conversation below. Keep your eyes on Ethiopia. From coffee fields to mineral frontiers, the nation is proving that strategic reform and bold vision can unlock opportunities that ripple far beyond its borders. The world is watching, investors are moving, and Ethiopia's story is only just beginning.